Good morning, Steve Free in Chicago with the morning grain comments. Markets, corn and wheat are lower, while soybeans slightly higher, but off sessions high, meal gaining on oil. Outside markets, dollars higher, stocks are lower, gold, silver, copper are lower, coffee, cocoa, sugar, and cotton are also lower. I think the market's number one concern this week is the Fed, central bank, raising interest rates 75 basis points, comments that they will continue to raise rates until inflation is down to 2% versus 8.3%, which could cause lower demand for food and fuel and could also increase unemployment to somewhere between 6 and 7%. Globally, economies are also slowing. There was one positive note that one of the cities in China stopped their lockdown, which could support increase in raw materials there. We also note weather-wise, the U.S. is going to be mostly warm and dry, especially in the southern plains, the Delta, and the southeast. Could see some scattered rains across parts of Brazil. There was some rains in eastern Argentina overnight. Rains continue in parts of Europe except France, and the Yangtze Valley in China continues to be dry. I think also this week we'll be watching to see if there's any news about China buying soybeans from the United States. Many people think that they will not as tensions rise between U.S. and China. And the President of the United States announced over the weekend that they will support Taiwan in case of an invasion from China. That may be offering some resistance to commodity prices. We will be watching also down the road the September 30th report on stocks in all positions. For the corn, somewhere over $1.5 billion, somewhere around 240, 250 for the beans, and wheat is a first stocks report of the first quarter demand. Usually that stocks report is lower than the average trade guess and suggests feeding during that time is higher than the even actual feeding for the entire year, something that the USDA continues to be unable to explain. So I think the markets are searching for value as demand remains slow in the United States from the export side. Russia wheat's cheaper than U.S., Ukraine corn, Brazil, Argentina corn is cheaper than U.S., and we also have Argentina soybean meal, soybean oil cheaper than U.S., and I think that we continue to see Malaysian palm oil prices sink lower due to rising supply and lack of demand. We'll be watching to see domestic demand in the United States remains strong as supply runs down before U.S. harvest. U.S. harvest weather should be warm and dry, but stocks remain very tight, causing the basis to remain strong, especially in corn. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.